Alright, first video of the day, let's do an update on Shiba Inu. So the last video we made for this, we outlined two different areas that we would have need to seen hold for us to remain bullish. So number one would be this blue line here, which you can see is the 200-day moving average. I've kind of just got this drawn out as a kind of best line of fit. Obviously when I drew that, we didn't have this data. So I said, you know, rule number one, we need to bounce off the 200-day. If we didn't bounce on the 200-day, then that would have been, you know, red flag number one, and at which point we would have been looking for red flag number two. So the second red flag after we broke below this blue line here, you can see that it would be this green box here. Now, when we drew this green box, the top of this green box lined up with the 200-day here. So, you know, it was more of just a case of the 200-day moving average and the bottom of this green box down here. So the bottom of the green box is the 0.618 of this micro move that we just made from the low to the high. Now, the second red flag has appeared. We have now broken below the 618. We've broken below the 200-day moving average. We came up through the 618, back tested the 200-day, and broke below it. And now we have also broken below the 618. So we are below the two key areas that I outlined in the previous video that I would personally need to see hold for Shiba Inu. Now, if we do zoom in, a point of bounce that I don't necessarily know if we outlined, but you can see here we did bounce off the 786. So in my opinion, if we're either going to do two things. Number one, we're going to break through this 618, break through this 200-day and go on a rally. Now, in my opinion, this would really only happen if Bitcoin starts breaking out, and you know, currently Bitcoin is breaking down. So while Bitcoin is breaking down, I'm not getting bullish on any altcoins. I've said this for the past couple of weeks. I am sitting on the sidelines with altcoins. So yeah, I mean, like I said, best case scenario, which I find maybe like 15% likely, is that we break out and go on a massive rally. The second scenario, which is what we look like we're setting up for now, is potentially a close round about this 258 today and a rejection followed tomorrow, at which point I believe we'd be coming back down to the 786. We've already put, you know, a tiny wick here, so in my opinion, you know, the bounce wouldn't be happening here. We would at least be going down to the previous low, maybe even down to this low here. I probably find that more likely, just because, you know, this is more of a micro move. So I mean, I could have done the fib from here to here, both you know, somewhat valid. I do just personally prefer this micro fib. As you can see, you know, the bullish trajectory really started here and started going up, and it stopped here. So this is where the fib tops out. But whereas if I draw the fib here, you know, it's like we went up on this micro fib, I reckon we crashed below everything. We did bounce on the 786 though, so I mean, you know, technically, like I said, this fib, both of these fibs are valid, but I do just prefer this micro fib, because this more macro fib is, you know, we went up, down, and then we went sideways for like a week. So, you know, in my opinion, I'm personally looking at this micro fib, and namely also because this coin is, you know, extremely euphoric. When we do pump, we pump to the moon. We don't really pump, come back down, back test previous lows, and then pump. You know, we can just see that it's a straight pump, dump, pump, dump, pump, dump, pump, dump. And you know, if we do look at this on a macro perspective, whenever we do dump, you know, above the previous low, above the previous high, sorry, or specifically, you know, we don't necessarily go back to the accumulation phase. So if you can see here, the first time we had a big accumulation phase, we had a big pump out of it and a dump, and then we had this big accumulation phase. We never came back to the initial accumulation phase. If we come over to here, you can see we had a big pump. I wouldn't really call it an accumulation phase. I would more say that this was just kind of building up momentum to go into here. And then you can see, you know, in my opinion, this is what I would call the accumulation phase, this big sideways action for months on end now. So yeah, this has almost been going on for like 3 months now, or no, you know, it has been going on for 3 months. So this is why I have the this tool now so we can actually see how long it's going on instead of me estimating. Just over 3 months we've been in this accumulation phase. So what do I personally foresee? Like I said, it is very likely that we do come down to here on the around about 174. Like I said, I mean, if we do follow the pattern, we have accumulation phase, and accumulation phase, and I imagine the bottom would be down here somewhere, still above this accumulation phase and still above this accumulation phase. So that is really all I have for you for Shiba Inu today. In my opinion, we have broken bearish, but we still do have a chance to redeem ourselves if we do close above this 0.618 in the next day or so. But in my opinion, it is much more likely that we're going to come up, backtest this, and fall down to, at least this red box around here. I mean, I have this red box because it lines up with the previous lows down here. It lines up with, this big accumulation phase over here. It also lines up with, this micro low, this accumulation, and, the bottom of this, this trend, or no, sorry, this, I'm getting confused. So it is just all of these kind of touch points over here. So I do believe, this is a very likely place for us to have a strong bounce from. If we do have a strong bounce down here, we will have to reevaluate what's going on in the market at that time. But you can see from the breakdown, it would be approximately another 34% drop. So that's all I've got for you for Shiba Inu today. Once again, none of this is financial advice. This is just my opinion on the market, and you've always got to do what's best for you. Peace.